Building a real estate portfolio that generates passive income for life sounds like a dream, but it's not an overnight success story. It takes time, strategic planning, and smart decision-making to create a portfolio that not only grows in value but also delivers consistent cash flow. The key is to focus on sustainable investments and long-term wealth-building strategies, rather than trying to get rich quick. In this video, I'm going to show you how to build a real estate portfolio that can pay you for life. I'll walk you through the steps you need to take, the mistakes you should avoid, and the strategies you can use to ensure your investments work for you for decades to come. If you're serious about creating lasting wealth, make sure to like, subscribe, and hit the bell so you don't miss any of our real estate tips. 1. Start with the right mindset. Think long-term, not short-term. The first step in building a successful real estate portfolio is adopting the right mindset. Many people enter real estate thinking about quick flips and fast profits. While that's part of the game, the real wealth comes from long-term thinking. Real estate is about creating a stream of income that continues to flow for years, even after you've built your initial portfolio. When I started my portfolio, I was too focused on the short-term gains. I wanted quick wins, but I quickly learned that sustainable wealth comes from making long-term, strategic investments. Shift your focus from immediate returns to long-term growth, and you'll be much more successful in the long run. 2. Start small. Scale gradually. It's tempting to jump into big deals when you're just starting out, but that can lead to disaster if you're not prepared. Begin with smaller properties, single-family homes or small multifamily units, that you can manage more easily. These smaller investments will give you the experience and cash flow to reinvest into larger properties as your portfolio grows. My first property was a small duplex that provided a steady rental income. By starting small, I was able to learn the ropes without taking on too much risk. As I gained more experience and saved up more capital, I began scaling up to larger properties. Don't rush the process. Let your portfolio grow naturally over time. 3. Diversify your portfolio. Don't put all your eggs in one basket. One of the keys to building a successful portfolio is diversification. Don't put all your money into one type of property or one market. Instead, diversify your investments by property type, residential, commercial, and industrial, and by location. This strategy helps protect you from market fluctuations and ensures steady cash flow from different sources. I made the mistake of focusing only on residential properties for too long. When the market slowed down, my cash flow took a hit. Once I diversified into commercial properties and added a mix of properties in different cities, I was able to weather downturns more effectively. Diversification spreads risk and stabilizes your income. 4. Leverage smart financing. Use other people's money. Real estate is one of the few asset classes where you can leverage other people's money to grow your portfolio. While using debt can be risky, when done correctly, it allows you to control much more property than you could with your own funds alone. The key is to borrow wisely and make sure the property's income can comfortably cover the mortgage and other expenses. When I first started, I was hesitant about using loans. But after seeing the power of leveraging other people's money, I quickly realized it was the best way to scale my portfolio without draining my savings. Just make sure to do your due diligence and only take on debt that you can afford to manage. 5. Focus on cash flow, not just appreciation. While property appreciation is an important part of building wealth, focusing solely on it can be dangerous. The real power of real estate is in the consistent cash flow, the monthly rent checks that pay for your expenses and provide income. By investing in cash flow positive properties, you can create a steady income stream that doesn't rely on market fluctuations. Once I started focusing on properties that would generate consistent rental income, I was able to build a portfolio that paid me every month. 6. Learn to manage properties efficiently. Hire the right team. Managing properties can be a full-time job if you're not careful. While self-managing can save you money, it can also lead to burnout and mistakes. Hiring a property manager or building a team of trusted contractors and vendors can make a huge difference in your ability to scale your portfolio while keeping things running smoothly. In the early days, I tried to manage everything myself, thinking I could save a little extra cash. But soon, I found myself overwhelmed with tenant issues, maintenance requests, and administrative tasks. 7. Reinvest your profits. Let your portfolio grow. One of the best ways to build a portfolio that pays you for life is by reinvesting the profits from your properties. Rather than cashing out every dollar, put your rental income back into new properties. This allows you to leverage your existing properties to acquire more, growing your portfolio exponentially over time. 8. Understand the tax benefits. Use real estate to build wealth. Real estate offers significant tax advantages, including deductions for mortgage interest, property taxes, depreciation, and more. Understanding how these tax benefits work can help you build wealth faster. You can use these deductions to offset your income and reduce your tax liability, freeing up more money to reinvest in your portfolio. I didn't fully understand the tax benefits of real estate in the beginning, but once I did, I realized how much money I could save. Depreciation alone has allowed me to defer taxes while still building my wealth. Make sure to consult with a tax advisor to understand how to use real estate tax benefits to your advantage. 9. Stay disciplined. Avoid the temptation of quick fixes. In the world of real estate, it's easy to get distracted by flashy opportunities that promise quick returns. But the key to building a portfolio that pays you for life is discipline. Stick to your strategy, avoid making impulsive decisions, and resist the temptation to chase after the next big thing. Real estate is about steady, long-term gains, not short-term risks. I've seen many investors get caught up in the latest real estate trends or the next hot property, only to end up with properties that don't fit their long-term goals. Stay focused on your strategy and make decisions based on solid research and planning. Consistency and discipline will always win in the long run. 10. Monitor and adjust your portfolio regularly. Be ready to adapt. Real estate markets change, and your portfolio needs to evolve with them. Regularly reviewing your properties, assessing their performance, and making adjustments is key to keeping your portfolio strong. This might mean selling underperforming properties, refinancing, or adding new types of assets to your portfolio. I've learned that no portfolio is ever static. I make it a habit to review my portfolio annually to see which properties are performing well and which ones need attention. Adjusting your strategy over time ensures that your portfolio remains profitable and continues to provide passive income for years to come. Building a real estate portfolio that pays you for life is possible, but it takes time, patience, and a clear strategy. By starting small, focusing on cash flow, diversifying, and reinvesting your profits, you can create a portfolio that generates income for decades. Don't rush the process. Take it step by step, and you'll be well on your way to financial freedom. If you found this video helpful, don't forget to like, subscribe, and hit the bell for more real estate tips. Got questions or want to share your own real estate journey? Drop a comment below. I'd love to hear from you. If you are serious about building income streams like we do in real estate, then Tube Mastery and Monetization is what we personally recommend. Link is in the description.